Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance, maybe so much confetti for a single company report. Today we're diving into Trinity Capital Inc.'s latest report, a document that tells us not just about their money, but also how they plan to play the financial game. Get ready because we're cutting through the jargon to bring you the juicy bits. And hey, if you like this kind of no-nonsense breakdown of huge company documents, make sure you're subscribed and definitely join our Discord community linked in the description below. We have some great conversations over there. So what we have here is a Form 8K report for Trinity Capital Inc. Think of an 8K as a heads-up exclamation point for the market. It's filed whenever something important happens that shareholders really need to know about, like big financial news or management changes. This particular report is all about their second quarter financial results for 2025, which ended on June 30th. Now, before we get into the earnings themselves, let's quickly look at what the company actually puts on the stock market. Trinity Capital Inc. offers common stock, which is like owning a small piece of the company itself. It also has these things called notes, specifically 7.875% notes due 2029. These are essentially loans the company has taken out from investors that it promises to pay back with interest by 2029. They trade on the Nasdaq Global Select Market under the ticker symbols TRIN for their stock intrinsic and TR&I for those notes. Trinity Capital Inc. is also checking the box to be considered an emerging growth company. This means they are a smaller company and get to follow some slightly easier rules for reporting their finances, at least for a little while. It's like getting a bit of a break when you're just starting out. The main event here is announcing their financial results for the second quarter. They put out a press release on August 6th, 2025, detailing how they did. This is the core of what we're here to decode. Financial results are like a company's report card. They tell us if the company made money, spent money, and how it's generally doing. Alongside the press release, they also released an earnings presentation. This is usually a slideshow that walks people through the numbers and the company's story for the quarter. It's often what management uses when they talk to investors, on a call to explain things in a bit more detail and answer questions. Think of it as the visual aid for their financial story. So we have the actual press release announcing their second quarter 2025 financial results. This is where the nitty-gritty numbers are laid out, explaining if they hit their targets, made profits or losses, and any significant financial developments. It's crucial for understanding the company's performance. Then we have the earnings presentation itself. This is likely where they'll try to spin the numbers in the best possible light, highlighting achievements and explaining any less than stellar results. It's important to look at both the raw data in the press release and how they choose to present it in the slides to get the full picture. Now let's talk about what these numbers generally mean for Trinity Capital. As a company that deals with capital, they are essentially in the business of managing money and investments, often for other businesses. Their performance is a big indicator of how well they are navigating the broader economic landscape and helping their clients succeed. The fact that they have these 7.875% notes due 2029 is significant. This tells us they are using debt financing to grow or operate. The interest rate of 7.875% is their cost of borrowing. It's important to see if they are generating enough profit from their activities to comfortably cover this interest expense. If their business slows down, paying this interest could become a real strain. This kind of debt is essentially a long-term commitment, so it points to a strategic decision to fund operations or expansion through borrowing. The report is signed by Kyle Brown, who is the Chief Executive Officer, President, and Chief Investment Officer. Having the CEO sign off on the report shows that leadership is taking responsibility for the information being presented. It also highlights that Mr. Brown wears multiple important hats within the company, which can be seen as either efficient leadership or potentially spreading himself too thin, depending on how the company is performing. Now let's dig into what these financial results actually say. Normally an 8K like this would come with detailed financial tables within the attached exhibits. Since we're focusing on the core information, let's assume the press release and presentations. We'd be looking for things like revenue, which is the total money the company made from its services. We'd also want to know their net income, which is what's left after all expenses are paid, the actual profit. Critically, we'd examine their assets, what they own, and their liabilities, what they owe. The relationship between these tells us about their financial health. For example, if they are taking on a lot of debt to generate revenue, we'd want to see if that revenue is growing significantly faster than the debt to justify it. For a company like Trinity Capital, we'd be particularly interested in how well they are managing their investments and the returns they are generating for themselves and their clients. Are they growing their portfolio? Are their investments performing well in the current market? Are they attracting new clients or retaining existing ones? These are the types of questions their financial results would help answer. If the company is showing strong revenue growth and increasing profits, it suggests their strategies are working and the market is responding positively to their offerings. However, if revenue is flat or declining and profits are squeezed, it might indicate they are facing competitive pressures, economic headwinds, or that their business model isn't as effective as it used to be. We also look at how they manage their cash. A company can be profitable on paper, but if it doesn't have enough cash coming in to pay its bills, it can still face problems. So, statements of cash flow are very important. The fact that they are presenting this on August 6th means they are reporting their results about a month after the quarter ended. This is a pretty standard timeline for publicly traded companies. It gives them time to gather all the data, do the necessary accounting, and prepare the official filings and presentations. Looking at the overall picture, Trinity Capital Inc. is navigating the financial markets. The decision to issue notes indicates a need for capital and the success of those notes, and the company's operations will be reflected in these quarterly results. The market will be watching to see if they can deliver strong returns and manage their debt effectively. Now, stepping back and looking at these numbers more broadly, Trinity Capital's direction seems to be focused on growth financed by debt. The 7.875% notes due 2027, 5% notes due 2029 are a significant financial commitment. Their strength will lie in their ability to deploy this capital wisely, generating returns that comfortably exceed their borrowing costs. A key risk for them is a slowdown in their investment activities or a downturn in the market, which could make it harder to meet their debt obligations and reduce profitability. The decision to be an emerging growth company suggests they are still in a phase of growth and development, eager to make their mark without being overly burdened by regulatory requirements, typically faced by larger, more established firms. This strategy can allow for agility. However, it also means they need to be particularly mindful of building a solid foundation and a strong track record. In conclusion, Trinity Capital Inc.'s August 6th report details their second quarter 2025 performance. The key takeaways are their reliance on debt financing, indicated by the 2029 notes, and their status as an emerging growth company. Investors will be closely scrutinizing their revenue growth, profitability, and their ability to manage their debt effectively to gauge the company's health and future prospects. Alright, so that's our breakdown of Trinity Capital's latest move. What do you think about their financial strategy and their emerging growth company status? Are these numbers a sign of success or a warning? Let me know your thoughts in the comments below. If you found this deep dive helpful, do give this video a thumbs up, it really helps us out, and consider subscribing so you don't miss our future breakdowns. Also, don't forget to join the Discord community for more insights and to share your own opinions. Thanks for watching, see you next time.